All right, let's try that again, shall we? 5 seconds in and I work out that my microphone's on mute. Stellar performance for a Friday afternoon. So let me just check that it is actually live on Facebook. I'm using my Zoom platform and we'll start that again, shall we? So for those of you who liked the post, you clearly didn't have your sound on. Sprung. All right, we're all good. So let's roll that one through again, hey? So I just wanted to do a video about the alternative turnover testing that has come out for the JobKeeper payment. So why would we need alternative testing? Well, for those of you who might not have been open a year ago or just don't fit the current rulings, there is new rulings for you. So I'm going to just run through. There are 7 different scenarios in which you would be eligible for that alternative testing. So I'm just going to name those 7 different scenarios so that if it's not you, you can jump out of the live and you don't have to keep watching. And if it is, then you know to keep watching. So let's have a look. So number 1, if I scroll back up, pardon me, just a tickle in the throat, not coronavirus. Why do we feel like we have to say that now? Anyway, number 1, if your business is less than 12 months old. Number 2, if an acquisition or disposal has changed turnover significantly. If a business restructure has changed your turnover significantly. If the business has seen substantial growth in turnover, i.e. This time last year you were smaller and this time now you're bigger, and so then your downturn isn't 30% less than what it was 12 months ago because it's grown. If the business has been affected by drought or natural disaster. If a business has irregular turnover, if a sole trader or a partner has taken leave. So those are the 7 different areas. So if that applies to you, keep listening. Now, I want to just very briefly explain what was the normal testing. So the normal testing was that you could take the month of March and compare it to the month of March in 2019. And if you had seen a 30% downturn or more in your trade, now this is your total income minus GST, not taking into account expenses, total income less any GST. If you're not GST registered, it's okay. It's total income. So March this year comparing to March of last year. The second thing that you could do is that you could take April and you could project what you would earn for April. Obviously, we are almost all the way through April, so you should be able to fairly accurately project what you were going to earn for April and compare it to April of 2019. If that doesn't work for you because you weren't open in April, then we'll talk about that in a moment. But the third option that you had underneath the normal testing was April, May, and June as a full quarter. You could project your earnings for April, May, and June and compare them to April, May, and June of last year. So those different testings were applied because some businesses started suffering downturn in March, some in April, and some it won't be until the April to June quarter. So what do you do if comparing now to comparing then isn't possible? So let's go through each of those scenarios one by one. So bear with me because I want to make sure that I do each section justice. A few of them are a little bit confusing even for me. So let's go through one by one. The first scenario is if your business is less than 12 months old. So this alternative test applies if a business was established less than a year ago and it cannot show a decline in turnover year on year. It is available to businesses that commenced before the 1st of March, but after the 1 or 3 month relevant comparison period. That's a little confusing. You have the option of comparing a 1 month period, which is March or April, or you have the option of comparing April, May, and June. So you will still be using this year's data. What I'm going to talk about is what you're going to compare this year's data to now. So the alternative test is that if the business is using a 1 month period, so either March or April, it should calculate its average monthly GST turnover. So GST turnover is total income minus GST nothing about your expenses, just total income minus GST. Again, if you're not registered for the GST, it's your total income. That turnover based on each whole month it has been in business. So if you have been open for 6 months, obviously don't include March, but you would take those 6 months, add them together, divide them by 6. That is now your average turnover. That's your average turnover amount, and you will now compare that to March of this year or April of this year. If the business is reporting quarterly, it should take that monthly average and multiply it by 3. So you still take the amount of months that you have been open, add them all up, and then divide it up to get your average. And then you either times it by 3 for your quarterly amount or 1 if you're comparing your monthly amount. Now, if you are in the minority of businesses that launched after the 1st of February, and so you had not been in business for a full month as of March 1, the average monthly turnover should be calculated by dividing the total February turnover by the number of days that you were in business. So if you opened on the 10th of February, you were only open for 19 days in February, you would take your total turnover for February and divide it by 19, and then you would multiply it by 29. This will give you an average turnover of a full month, and you will then compare March to that, whatever you get in that test. There is a second alternative test for businesses that have not been open for a year yet. If the business has been around for 3 months or more as of March 1st, 2020, the business owner can choose to use the GST turnover for the 3 months leading up to the date as the comparison period. So what that means is, obviously, if you've only been open for 6 months, and your first 2 or 3 months were really low because you opened but you weren't making any money, and to add that into your 6-month average would considerably drop your average, you can actually take the 3 months prior to March, so December, January, and February, and add them together and divide them by 3 instead. So whichever way is going to benefit you more, you can use. Oh, there's just a note that if the months in which you received, yes, you can divide by 3 if you're doing quarterly or bi-monthly if you're doing month on month, same as before. Concessions to consider. There is an additional note for any businesses that qualify for the ATO's 2019-2020 bushfire lodgement and payment deferrals, or received any drought help concessions. If you qualified for either of these benefits, then you should exclude the months covered by those from your calculations. But if the months in which you received those concessions are the only months that you have been in business, then you can disregard that and you can include them all the same. So if you were in receipt of the drought help concessions, there's just a little thing to consider there. So if that's you and you're not really sure what that means, please just reach out and I'll give you a hand to calculate it. So second scenario, an acquisition or disposal has changed turnover significantly. So this applies if a business went through an acquisition or disposal process that changed its turnover, meaning year-on-year comparison no longer makes sense. There is an alternative test. Business owners in this situation should use the month directly following the acquisition or disposal event as the comparison period. If the business is using a quarterly comparison, then the turnover of that month should be multiplied by 3. The comparison period should not be the 3 months following the event. So if a business has been through more than one acquisition or disposal, they should use the following month as the most recent event. There's a few other things to consider there. I'm not going to go through them, but if this is you, if you acquired another business, which has obviously increased your turnover, you can use the month immediately prior to that. I think that's what I was reading. Or is it the month immediately after? It might have been the month immediately after. So if you sold or purchased part of your business in the last 12 months and that is affecting your turnover test and you don't satisfy the normal test, reach out and I'll help you through it. Again, if you received bushfire payment lodgement, payment deferral, or drought help concessions, you should exclude any month that was covered by these concessions. You should instead use the nearest alternative month instead. That is, unless there is no other months available to you. So if you did buy or sell, please reach out and I'll help you decipher that one, because that's one of the confusing ones. If a business restructure has changed turnover significantly, this alternative test applies if your business or part of it has undergone a restructure in the last 12 months, meaning that your year-on-year turnover is not a suitable comparison. If the business is making a monthly comparison, it should use the GST turnover for the month immediately following that, in which the restructure occurred. If the business reports quarterly, it should take the GST turnover for the month following the restructure and times it by 3. If there is more than one restructure, the business should use the month following the second event as the comparison period. Again, if the business is making a 3-month comparison, that figure should be multiplied by 3. And then there's another one. If the business restructure happened less than a month before the turnover test period, i.e. February, the business should use the GST turnover for the month immediately preceding that test period. So there are concessions again for the bushfire and drought, same concessions as I've read out for every other one. So if you restructured your company and it affected your turnover greatly, the month immediately after that restructure, that is now your comparison. So now you'll compare March of this year to that month, or April of this year to that month, or April, May, June to that month times by 3. Number 4, if the business has seen substantial growth in turnover. So this provision makes allowances for high growth businesses, including startups that may have seen a significant increase in GST over in the past 12 months, but still suffered a decrease caused by the COVID-19 outbreak. So a business can use this test if it has seen more than 50% growth in GST turnover in the 12 months leading up to the test period. So let's see what that means. The test period begins in March. So for the 12 months prior to March, February 19 through till the end of February 2020, if you saw more than a 50% growth in your GST turnover in that 12 months, you will be able to use a comparative testing. The alternative test also applies if the business has seen 25% growth in turnover in the 6 months prior. So the same sort of scenario, if in the last 6 months before March, you saw a 25% growth in turnover, or 12.5% growth in the 3 months prior to March. So whichever one benefits you, you need to pick 50% over 12 months, 25% growth over 6 months, or 12.5% growth over 3 months leading up to the test period being March, or possibly April if you're using April. What is the alternative test? Okay, if you've satisfied that criteria, what do you do now? If the business reports quarterly, it can use the 3 months directly preceding the test period as its comparison period, i.e. January, February, and March. You can compare that to April, May, and June. If the business reports monthly, it should take the GST turnover from those 3 months, January, February, and March, divide it by 3 to get a more accurate monthly figure, and then compare that to your 1 month, March or April. Again, there are concessions to consider if you received bushfire lodgement and payment deferrals or drought help concessions. So those concessions are actually the same all the way through, I think. Should be. We'll see. Number 5, if the business has been affected by drought or natural disaster. This test applies to entities that conducted some or all of their business in a declared drought or a natural disaster zone during the relevant comparison period and who believe that they had a negative effect on their turnover. So obviously, if you were in drought this time last year, you might not have had much turnover. And if you do have turnover this year, then it's not really fair to compare it, right? So that's you, or if you were in a natural disaster area. So the alternative test, the business in this situation can simply use a comparison period from 2018 instead of 2019. So instead of comparing March 2020's revenue to March 2019, they can compare it to March 2018 instead to get a much more accurate idea. The same applies if you want to use April, compare it to April 2018. If you're going to use April, May, and June, you compare it to April, May, and June of 2018. No concession on that one because it's already talking about you. If a business has irregular turnover, a business can apply this test if their turnover is not considered cyclical, i.e., in my area, we have sugarcane farms. So we harvest at the same times every year. So you should be able to compare year on year and it would be the same. That's considered cyclical or cyclical. Depends on how you want to say it. If you're from Queensland or New South Wales, potato, potato. Businesses will also have to prove a significant difference in quarterly turnover. A business will be eligible if, over the last 12 months leading up to the test period, the quarter with the highest GST turnover saw more than twice the revenue of the lowest performing quarter. So if that is you, the alternative test is that a business can calculate an average monthly GST turnover for the 12 months leading up to the test period. And that will be your comparison turnover. So if you were going to use March, you would do February through for the 12 months, add them up, divide it by 12. That is now your monthly figure. Now you compare March, move it for April. And then also if you're doing it for the 3 months, April, May, June, you obviously take that figure and times it by 3, the same as everything else. The concessions for bushfire lodgement, payment deferrals, and drought help relief also apply for this one. Now, last one, and I know that there is at least one of you watching this live video who this actually applies to. If a sole trader or a partner in the partnership has taken leave. So if you went on holidays for half of March and couldn't compare March, or you took a month's holiday, half of March and half of April, then this is you. So this allowance is for sole traders or partnerships with no employees where an individual did not work for all or part of the comparison period in 2019 because of illness, injury, or other leave. The alternative test applies if that leave caused a negative impact on revenue at that time. So how do you prove that it had a negative impact? Well, if you're a sole trader and you don't get paid if you don't work, that's a negative impact. If you took 3 days off because you had the sniffles, it probably wouldn't. But if you took significant time off, then it would have. And you would know if that applies to you. So in this case, business owners should take the month immediately following the individual's return to work and use this as the comparison period. So if you were gone for half of March and half of April, then you wouldn't use March or April, you would then use May. So you would use all of May, that's now your comparison month. And so if you're comparing March, you compare it to that. If you're comparing April, you compare it to that. And if you are doing the 3-month period, then you should multiply it by 3 rather than using the actual 3-month period. The concessions for the businesses that qualified for the bushfire lodgement, payment deferrals, and received drought relief concessions, the things are a little bit different for you, and I've read those out previously. So those are the 7 areas. I know that the wording that has come out has been a little bit hard to understand, but what you're reading is you're trying to calculate your new comparison month. So you will still use March, April, or April to June of this year. You just need to recalculate the month that you want to compare it to. So if you do fit in any of these 7 scenarios and you're still not sure, please reach out send me a message to the page and I will help you and we will get you through this and we'll get you applied. Now, I want you all to take a breath though, and just know that it is the 24th of April. You still have, what is there, 30 days in April? 6 days left to apply for this. The ATO portal does not close on weekends. The ATO portal is open on weekends. Of course, your accountant or bookkeeper, if they need to help you, might be closed on the weekend, but I just want you to take a breath and not panic. I know that applications have been open for a little while, and I know that for those of you who fall underneath these scenarios, it's been a little bit worrying because you're thinking, when can I apply? Well, now's the time for us to take a breath, not rush through any of these calculations, work through them methodically and logically, confirm that yes, we do fall into that category and we do satisfy those rules before applying. Because if you apply anyway and you click submit and you're actually not, you've signed a declaration. It's as good as doing your tax return and it's as good as lodging your BAS when you sign a declaration. And if you have been misleading on that declaration, there will be harsh penalties for that in the future. So I want you to really take the time to make sure that this is going to, that you're going to fit within those rules. But reach out. Any help on Messenger is free. I'm not going to just send you an invoice for the time. If I need to do a call with you and help you work out your turnover, there may be a tiny fee. It depends on how much I need to actually help you. But sending a message and asking some questions is absolutely free. So please reach out. That's it. We're done. Alrighty. It's Friday afternoon. It is 4:30. Get out of here.